Good day, everybody. Welcome to the Deal Scout. On today's show, we're going to have a conversation with George, who's going to talk to us about Honeycomb Credit. George, welcome to the show, man. This is cool.
Thanks, Josh. Excited to be here.
Yeah. All right. So, why don't you tell us a little bit about who you are and what are you working on?
Yeah, of course. George Cook, I'm the co-founder and CEO at Honeycomb Credit. My background is in community banking. So my family has been running a small community bank in rural Appalachia for 130 years. So I,
Wow.
yeah, yeah. Grew up in the family business, spent a lot of time thinking about community capital and really what that means for local communities. Ultimately, spent most of my career doing big data credit analytics. I was a real nerd working at TransUnion and then Zest AI, kind of building a better black box underwriting algorithm at different places. And I saw that there was this massive consolidation in the community banking industry, and that the banks like my family's bank were becoming the exception. They were no longer the rule, and that consolidation was disproportionately hurting small businesses. That was getting really hard for the average Main Street small business to get access to fair capital. And so my co-founder and I, my co-founder is an investment banker turned small business owner. We put our heads together and said, how can we bring community banking back for the 21st century? And that's what we're trying to do at Honeycomb. So we've built a loan crowdfunding platform where locally owned businesses can borrow from customers, fans, or really any investor who is looking for a return, but also looking to have impact by supporting these independent small businesses.
Very cool. Now, I know we'll get into the weeds of everything, right? Like the details of the deal. But, why did you guys choose to go the loan route rather than, most crowdfunding platforms that we've interviewed or that we're talking to are going equity? Why did you guys go that route?
Yeah, it's a great question. And having gone out and talked to hundreds of small businesses before we started the company, my co-founder and I realized that most of the Main Street small businesses, the corner bar, the restaurant, the brewery, the flower shop, these are businesses that, for the most part, do not have a big liquidity event on the horizon, right? They're not going to be bought by a private equity shop. They're probably not part of a roll-up strategy. And chances are, in the life of that business, they're not going to sell that business, or maybe they will, but it's going to be a long time down the road. And at the end of the day, what does it mean to own 10 shares of your local hardware store if it's just a local hardware store that's going to be there for 25, 30 years? At the same time, these are businesses that are very familiar with debt. These are businesses that are comfortable taking on debt. They have, for the most part, really strong cash flow. And so they're unafraid of debt. These aren't high tech, high growth businesses where cash is super precious all the time. And so we realized that debt was a more comfortable instrument for these business owners, and was a better investment opportunity for investors because there is that fixed income recurring cash flow, instead of kind of hoping on a prayer that there might be a liquidity event for the hardware store in the next 5 years.
Yeah. Now, being a founder myself and being in small business from, one of the things that I was always hesitant about, and let's talk some of the fears in the future, but I was always nervous about giving a piece of my baby away. Now, I had Visa, right? Like I was very familiar with debt, right? A couple of my first businesses were funded by Visa, right? But I was always nervous, and I guarded my equity, right? Like the ownership of my baby. But I had credit cards, and I had investors, or I borrowed money from this or that. So I think it was really smart that you guys chose this way, to kind of set yourself apart. What fears or what concerns do people have when it comes to being an investor, right? Being a lender on your platform, and also receiving like a business when they sign up. Like what are you hearing or feeling?
Yeah, I think maybe we'll start on the business side. I think for a very long time, the past couple of decades, the trend has just been it's getting harder and harder and harder for the average small business to get access to fair capital. Banks keep raising the bar and setting their standards higher, setting their minimum loan amounts higher. And kind of filling that white space left behind by banks are a lot of online lenders, many of whom are outright predatory. There was a study that came out a couple of years ago that found that the average interest rate for an online loan for a small business is 94%.
What?
It's insane, right? It's just incredibly expensive. And a lot of business owners are getting taken advantage of. And so I think one of the challenges that we have is education, right? I think a lot of business owners are so used to the sharks kind of circling them that whenever they hear about a new online lending concept, they rightfully kind of put walls up and say, whoa, whoa, wait a second, what is this? But as they get to learn what we are, as they get to learn that this is kind of a logical evolution of crowdfunding, that this is not just a capital raise, but it's also a way to market their business and get their brand out there in a really exciting new way, we're able to overcome those objections.
Man, that's so cool. All right, so talk to us about your family's been in banking for 130 years. Why did you see that this was a need, and does your family consider this like a competition?
Well, no, so I think first and foremost, no, very, very good relationship with my family's bank, and we, talk all the time. My father was the CEO for a long time. He just retired. My cousin is now at the helm, and love what they're doing, and seeing in kind of an old school community bank that is able to make investments in technology and continue to grow and evolve while still being really community focused, it is an inspiration for me. And I think what we're hoping to create is something that can be really complementary to community banks and regional banks, because just the pressures that are being put on the banking industry. I mean, think about it. You and I, whenever we have a bank, we expect that they have a really good mobile app. We expect them to have a great website. We expect them to be on demand and able to serve us at any time, anywhere we are. And that can be really challenging. That technology infrastructure is really expensive and challenging to host and keep up to date and keep safe if you are a 5 branch community bank in Missouri, right?
Hmm.
And so, there's reasons why this change in the banking industry has happened, and a lot of it is due to consumer preference. And what we're hoping to do is to support businesses that might not be ready yet for bank capital, help them grow and get to a place where a bank might be able to work with them. And increasingly, we're starting to think about ways to bring institutional capital like banks onto our platform to be lenders side by side with everyday people right on the platform.
Yeah, super cool. So, a bank, bringing a bank onto your platform and what you guys are doing, the bank might say the reason it's so difficult to get money is because our due diligence and our background checks and our underwriting and all this crap, and that's what affects our ability to give money, right? So, how are you guys able to do it better than us?
Yeah, and I think this is where my nerdy data analytics background kind of marries my banking background really well. The way I see it is the reason that community banks historically were able to do a really good job of lending to small businesses is obviously when the small business walked into the bank, they looked at the financials, right? They understood the overall financial health of the business, but they also knew that business. They knew if the coffee shop made a good cup of coffee. They knew if they treated their customers well. They knew if we just had a big snowstorm here. They knew if they shoveled their sidewalks whenever there was a snowstorm, right? So consciously or subconsciously, the community bank was able to bake in this qualitative information about the small business into their underwriting decision.
Yeah.
But as banks have consolidated, you no longer have that decentralized lending decision, but now it's being replaced by, someone sitting in Manhattan or some black box algorithm in Silicon Valley. All of that qualitative data is disappearing. And so what Honeycomb does is we're bringing that qualitative information back into the fold. So we put businesses through a really rigorous due diligence process. We make sure the financials are sound. We make sure the business owner has a head on their shoulders. But then the the people that are investing their own hard-earned money are voting with their wallets. And most of those people know the business. They know, again, if that coffee shop makes a good espresso. And chances are you're not going to invest in the coffee shop that makes a really crappy espresso. And so there's this signaling, and we're bringing that qualitative information back into the fold. And so we're able to de-risk these businesses in much the same way that community banks were able to, without the need for a big branch infrastructure and a lot of the overhead costs that a traditional bank would have.
Yeah, so cool. So, coffee shop's great example, right? So, interviewing 800 entrepreneurs and investors and all these people that come on different shows, one of the things that I hear is access to capital is really tough, right? Here's some routes we could currently go to get capital. Friends and family. What if I don't have friends and family with money, right? Okay, you could go rack up credit card debt, which it could really kick you in the butt really quick, right? So in the future, like the question I want you to kind of wrap up with me is, let's compare Visa versus Honeycomb, okay? And then there's okay, I could go raise money or I could go to a bank, right? So like they're looking at all these resources or opportunities, but man, if you go to a bank, it can be very difficult. And they say, yeah, get an SBA loan. That might take a really long time, jump through 1,000 different hoops, and I might not get it. But if I'm standing in line, I go, man, this is really good coffee. And I see that guy in the coffee shop 1,000 times. I go, hey, by the way, we'd like you to be one of our investors. Like that guy's more likely to invest than the guy in the bank, right? Is that what you're feeling?
It's exactly it. And by the way, you can be an investor in the amount of time from your mobile phone that you're waiting for your latte to finish, right? Like
Yeah.
it's a seamless process. You can get on the site, you can see the campaign, you can make the investment decision quickly and invest almost instantaneously.
Yeah. All right. So now let's compare. All right. So here let's say I'm building a brewery or whatever, and I want to go, okay, I need some money to help fund this. I'm self-funded, but I'm looking at Visa, right? 0% interest for a little bit of time, and then it's going to go up to 1,000%, or Honeycomb, right? Like kind of compare and contrast, American Express versus Honeycomb of why a business owner should work with you.
Yeah, so I think there's kind of a couple dimensions to this. So first and foremost, an easy way to think about where Honeycomb sits in the market is that we are a heck of a lot faster than a bank, and we're a lot cheaper than most online loans or credit cards. So if you need money really quickly, throwing something on the credit card is probably the right way to go. We actually work with a lot of businesses who refinance that credit card. We've talked to a ton of business owners who they're scrappy, right? They need to put this round of inventory on their credit card. They need to put that piece of equipment on their credit card, and it adds up. And all of a sudden, they have $40,000 of credit card debt, and they're like, "Ugh, I would really like to get this into a payment and get this paid off." We do that all the time. So that's kind of where we sit. I think the other really important component of this is Visa is not going to come shop at your restaurant, is not going to come to your coffee shop. They're not going to promote your business. Whenever you get people, real everyday people, to invest in your business, they become evangelists. They become advocates for your brand. They tell their friends, they shop at your business more often. And so we're actually seeing year over year that the average Honeycomb customer is seeing a really significant bump in revenue, about 60% after running a campaign, at least in part because they're able to activate their community. They're able to activate people in their network to be a part of that growth journey with them.
Man, that's cool. So now, why would a business owner, right, rather than just going and trying to get a bunch of people to lend money to them, right? Like there's 100 people in line. We're like, hey, everybody, lend me $100, right? You know, why would they use you rather than trying to borrow money from grandma or 100 people in line?
Yeah, it's interesting because we operate under what's called the Jobs Act, and regulation crowdfunding in particular. And if you look at kind of the history of securities rules, basically since the 1930s, it was illegal for someone to borrow money from a non-accredited investor. So if you're trying to borrow money from someone who was not a millionaire, it was basically not allowed at all. Through the Jobs Act, they loosened those rules a little bit, but it has to be done through a vetted funding portal like Honeycomb or several others. And so, first and foremost, the reason that people would work through us is because working through us means you can borrow from both accredited investors, but also non-accredited investors, right? Those people that want to put in $100, $250, they're just as valuable as the people that can put in $10,000. And so we create a platform that can, one, compliantly aggregate that and let you reach people that are unaccredited, but also just mechanically handle that. Because if you're talking about borrowing money from 150 people, I couldn't possibly imagine sitting around the kitchen table every month writing out 150 different checks to all of my investors. And so we make it really simple so it all happens in one place. All the legal and compliance is taken care of. And so it's just a really seamless process to get money from a big network, from a big community, and not stress about the operational complexity of that.
Okay. So to build this, right? Jobs Act came out in 2016, right?
That's right. Yeah.
Okay. So, when that happened, what started going through your head and how did you decide one day, hey, I'm going to build a crowdfunding platform, but we're going to focus on debt? Like what were the sparks and what was the process of building with your co-founder?
Yeah, it's interesting because at the time my co-founder and I were in grad school, and so I spent the first 6 months or so in grad school thinking to myself, small business lending in this country is really broken, and I'm going to look around at all the cool startups that are fixing small business lending. And I kept looking and looking and looking, and I didn't see anyone that was doing it in a way that I thought was an exciting business model that was equitable, that was fair to small businesses, that was inherently scalable. I don't know. There's some really cool companies out there, but none that really got me excited and fired up. And it was right around the same time that my co-founder was trying to get an SBA loan for one
Mm.
of his small businesses, and they kept pushing him down the road and took longer and longer and longer, and then ultimately he got declined from one bank and then had to restart the process with another bank. And he had been thinking about this loan for like 6 months, and he said, my goodness, this is like just fundamentally broken, right? Here's an Ivy League MBA, former investment banker in London, and if this guy can't get an SBA loan, who can, right? And so we, at that point, kind of put our heads together. We were on a road trip together, of all things, and just started kind of brainstorming in the car. And it was really this magical time. The rules for regulation crowdfunding were just being finalized, and the stars kind of aligned, and the rest is history.
Yeah. So since then, right, going through the process of launching a crowdfunding platform, there's a lot of work to be done, a lot of legal, right, a lot of compliance, FINRA, SEC, all sorts of stuff. How did you guys go through that process? Did you have your jobs that you're like making the money and then going through that process on the side, or what did that look like?
Yeah, it's interesting, right? Not a lot of places is your first hire a chief compliance officer, but ours was, right?
Nice.
We got into a great accelerator program in Pittsburgh, where we're headquartered. Immediately brought in someone to the team who, as our chief compliance and operations officer, he's now a co-founder in the organization as well, and it's just been phenomenal. And he came from a hedge fund background, so had experience working with FINRA, had experience working with the SEC, and knew how to keep the trains running on time, right? And that's it was a big investment for a very, very young, scrappy startup to make. But it was an important one. We found that it really paid dividends because we were able to navigate that process, able to create a funding portal that was really doing something quite different from most of the other funding portals. To your point, most of them were doing equity. Not a lot of people were thinking about debt. And so there was a lot of education we had to provide to our regulators. We had to kind of bring them up to speed on our vision, and some of the ways the rules were written wasn't totally clear how it would apply to debt. And so it was a lot of work. It was stressful at times, but it was exciting, and it was fun to know that we were pioneering this and kind of building a new path and basically a whole new asset class.
Yeah. Nah, super cool. Super cool. So as you were building this, when people ask like, what are you building? Did you have a clear picture of what Honeycomb was going to be, or did it evolve? Like, did you start out as we're definitely going after crowdfunding and maybe, figure stuff out, or did you always have this image in your mind?
So a lot of things have evolved in terms of, how big the loans are going to be and our ideal small business, and our thinking is getting clearer every single day.
Hmm.
But I think we've always had this vision for how crowdfunding inherently can help solve the problem that's been caused by the disappearance of community banks.
Yeah.
Really, this idea of empowering people who know the businesses to be the community bankers is something that has always been kind of in the DNA of the business model and something we've always relied on. But of course, with any startup, there's a lot of ups and downs and a lot of changes to the business model and evolutions over time. But I think generally speaking, the big picture has remained relatively, has kind of remained relatively on course.
Hmm. Awesome. So you gave an example, right? If the MBA guy who's, has background in investment banking and all this stuff, they had a hard time getting an SBA loan. Like, I don't stand a chance in hell going and getting a loan because jumping through all these hoops and doing all that stuff. Financials is not my middle name, right? Like, I'm the high visionary, right? So there's a lot of business owners who are similar to me, who are high visionary, hard workers, figuring it out along the way, building stuff. And, like, how do you work with them to then build a campaign and raise some capital and then stay on track on making sure everything is paid and in the right way and reporting? How do you guys handle that? Because that would be a huge value for someone like me.
Yeah, definitely. So it starts with a pretty robust diligence process, like we talked about. So it is making sure that the business owner does have not just an idea, but they actually have a little bit of track record or a really clear plan to get to a point that they can repay the loan.
Mhm.
And if they're not there yet, then we have a group of business coaches and bookkeepers and accountants and all these other resources that we have built alliances with and partnerships with that we can refer business owners to help them get ready to take on capital, because we recognize not every business on day one is ready to take on capital. But from there, once we get through that diligence, one of the things that's pretty unique with the way we operate is we partner every business on our platform with a crowdfunding coach. So someone who has run dozens, if not hundreds, of crowdfunding campaigns, who knows the strategy to build an effective marketing campaign, to get the word out, to really hone the messaging for the crowdfunding campaign and make sure that it's reaching the right people with the right message. And then so we help them, the business owners go out, they raise that money. And then what we're finding is many business owners through this crowdfunding process are starting to identify people in their network who are really value added, right? We have one of my favorite stories. We had this three brothers that make these awesome pickles, and they were raising money to get this fancy cucumber slicing machine, and one of their investors um, owns a store, and he said, "Oh, hey, like, can I start selling your pickles in my store?" And they're like, "Yeah, of course." And so all of a sudden, because this person invested in their business,
Yeah.
they're going to generate more revenue from that relationship than they're ever going to pay in interest on their Honeycomb loan. But they're able to, because people learn who they are and what their business is about, they're able to find people in their network and in their community and other businesses that have raised money on Honeycomb to share best practices, with, to get that mentorship, to get advice from, to continue to really pound the pavement and keep growing the business.
Yeah. So when was launch of Honeycomb?
We ran our first campaign in January of 17.
Okay. Since then, give us some metrics of what you guys have accomplished.
Yeah, so we are, or excuse me, 18, January of 18. So since then, we have done we've worked with about 200 businesses. We have moved $11 million across the platform.
How much?
11 million.
Awesome. Good
Yeah.
job, man.
Yeah, thank you. And that number is growing exponentially. Almost half of that was last year, of that 11 million. So yeah, we're growing fast. We have now done campaigns in, I think, 23 different states. So the plurality have been in our footprint in Western Pennsylvania and Eastern Ohio, but we now have done campaigns all over the country and are going to keep expanding and rolling this out across a broader part of the U.S.
Awesome. Very, very, very cool. What was like the hardest part to that you like the biggest hurdle that you guys have found from the idea of this to where you are now, something that you have overcome?
There's so many hurdles of getting a business off the ground, right? I just
Yeah.
pick one. I think one of the unique things with a financial technology company in particular, and we talked a little bit about it, but in order to get a license from the SEC and FINRA, you have to have a fully built technology platform before you can submit the application. Then you go through the application, that application takes many months, and then at the end of that, you can finally go to market. And so the idea in most startup ecosystems is this minimum viable product. Roll something out, make lots of really quick changes, but in a really heavily regulated environment, that
Hmm.
isn't an option. And so with very limited data, we've had to make, for us, quite large investments in things that we believe are the right decision, but we're not going to find out if they actually were the right decision for 12 or 18 months. And so those could be some nail biting moments for sure. I think the education component of this is also a really big hurdle that we're learning and getting better at clearing that hurdle every single day. But the value proposition for small businesses is phenomenal. We think the value proposition for investors is phenomenal, but it's a new thing. No one is used to investing in the coffee shop, or very few people are. Very few people are used to investing in the brewery. How do we educate people on what that means and how that works and how to make smart financial decisions? So yeah, that's something we're learning and getting better every day.
So, what would be a like an ideal business? So here I am in Central Florida, and I'm looking to use Honeycomb to raise some money to build out my idea or to grow or expand. Like what's an ideal business? And then like what's the minimum that you're like, hey, if you're gonna raise under this, it just doesn't make sense. Here's the sweet spot for you.
Yeah, so ideal business for us, it can vary quite broadly, but I think the really one of the unifying things is that it is a business that is consumer facing.
Hmm.
So that might be a brick and mortar storefront small business. We talked about the coffee shop, the bakery. Those are fantastic businesses. They do really well on our platform. Can also be B2B2C businesses. The pickle company I talked about, they don't have a storefront, but they have a brand that people engage with, and people are really excited about their gourmet pickles, which are quite good. Pittsburgh Pickle Company. But it really is that they don't have that direct touch point, but because they've built this brand that people can engage with, they were still able to run a very successful campaign. So that's kind of the number one criteria. From there, for generally speaking, most of the businesses we work with do have some operating history. We work with some startup businesses on a case by case basis, but generally looking for businesses that are ready to grow to the next level. So maybe that was someone that was selling at the farmer's market, they're ready for a food truck. Maybe it's someone with a food truck ready to move into a brick and mortar, or brick and mortar into their third location. Those are exactly the types of businesses that do really well on our platform because it gets people excited. People can see tangibly the impact of their investment. And there's something we can sink our teeth into from a due diligence perspective as well.
Yeah. So what would be did you mention kind of like the range in terms of how much I should borrow or could borrow?
Yeah, so on the low end, about 25,000 is typically our kind of smaller size, up to $250,000 or more. The legal Reg CF limit is $5 million. At this point, we're not going that high. We're really kind of focused on folks between 25 and 250, but on a case by case basis, we'll evaluate larger deals as well.
Then what do I offer my investors, right? So like let's just say I'm going to raise 50K to build finish out my coffee shop. Like how do I know even what to offer my investors?
Yeah, so generally the interest rates are anywhere from kind of 6% on the low end up to about 14%. So it can vary, depending on how long your business has been in business, what type of collateral you might have. But 6 to 14%, the average is right about 10%. So again, way cheaper than a credit card or one of these online loans, and can be pretty competitive with a traditional bank loan as well.
Very cool. All right. So how long would this process take? Building my coffee shop, need some help. How long would that take? I come to you.
Yeah, so from first conversation to money in the bank can be as short as about 30 to 45 days.
Okay.
On average, it's about 60 to 90 days.
90 days. Got it. So as you have, let me see, over 200 companies that have come through the platform. Like, what is your capacity? Let's just say we turn it on here in Central Florida and we're pumping. Like, what would be the capacity of what you guys could handle?
Yeah, so we've built the infrastructure, we invested a lot in the technology. We could handle I my team would be very nervous, as I said, hundreds of campaigns at a time, but we could certainly handle dozens of campaigns at a time. And we want to be in a world in the not too distant future where we are running hundreds of small business campaigns at any given time on our website. So that's the direction we're heading. We're really going to start scaling this up, really start bringing up the volume of businesses on the platform.
All right. So now talking to a business owner and they're getting ready to go, raise 100K. And they come to you and they go, "George, I'm really looking at you versus X, right? There's another company out there and man, I'm just kind of getting caught between this debt and this equity conversation, right? Why should I choose debt at this moment? And what would, WWD, whatever, what would Dave Ramsey say, right? On this whole debt stuff. Like, so how, what are your thoughts on debt for business and why should I go that versus equity?"
Yeah, so I think it depends the path that you're on, right? There are some businesses that are looking to be the next unicorn. They're trying to be the next Facebook. And to do that, they're going to have years of losses and they're going to have years of negative cash flow. And that's part of the game that they're playing. And they're taking these big bets for years at a time. And for those businesses, debt is probably not the right solution, because cash is going to be really precious and they're already going to be running at this cash flow negative. And so it's going to be really difficult for them to service debt. But the vast majority of businesses in this country are not on that trajectory. The vast majority of businesses are looking to support their family. They're looking to support themselves. They're looking to obviously grow and become large, but not necessarily thinking about the next $1 billion opportunity.
Sure.
And for those businesses, a lot of times equity can mean giving up control of the decision-making process. It can mean having to bring those silent partners into the fold, who might not be so silent, right? Who might have pretty strong opinions about how you make decisions for your business in the future. And so debt allows you to hold on to that, to preserve the ownership of your business for you and potentially your co-owners. And also to have kind of a much more um, predictable cash flow. You know exactly how much you're going to owe every month, and you can just build that into your business model.
Right. Exactly. Awesome. 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 Great illustration there. So, deals go wrong, right? I've interviewed hundreds of deal makers. Deals go wild sometimes. So in this situation, so and so raised 50K, and then let's just say, COVID happens and their business gets shut down or, a change in industry, or the person gets sick. Like, there's risk to invest, right? This is an investment, like what have you seen in your experience with the 200 businesses so far?
Yeah, great question. And yes, 100%. There's risk with every investment, and certainly investing in small businesses is risky. And encourage people, if they're going to check out the Honeycomb Credit site, if they're thinking about investing, be aware that you could lose all of your money, and that's a really important consideration. That said, to date, our charge-off rate in the portfolio is less than 1%.
Wow.
And
Explain what that means for someone who does.
yeah,
Explain what that means.
yeah, okay. So the total amount of capital we've deployed, only less than 1% of that capital have businesses been unable to return to borrowers, or have claimed that they're unable to return it. And we actually handle it in a really unique way. We have approached the default rate, the charge-off rate, whatever you want to call it, in a really democratic way, in that investors can actually vote pro rata on what course of action they want to take whenever a business hits a hiccup. And you can imagine, so your COVID example, right? We had some businesses, they were having difficulty with cash flow. They were, forced government shut down, whatever it might be.
Hmm.
Um, and they reached out to their investors and they said, hey, is it okay if I go to an interest only period for X number of months? And so the investors had this choice. They could say, yeah, we this workout plan, this new proposal from the business owner makes sense. We're going to approve that. We're going to modify the terms of the deal, no problem. We can we can vote to move into collections if we think the business owner is not in a good position. We don't trust the plan. We can vote to proceed with collecting on whatever collateral there might be to liquidate the business. Or in some cases, investors have the right to forgive their own personal piece of the debt. So, I lent $500 to my cousin during the pandemic, and his hot dog stand had a hard time. This is hypothetical. This is not real. And I said, oh, you know what? My cousin made a good go of it, but I'm going to forgive my $500. You have the right to do that as an investor. And so we make it really democratic. We really bring people into the fold, and so the investors have a say on what course of action, how they want to support or support the business owners as they can, or if they think that something is awry, they have the opportunity to try to recoup their money.
Very cool. Very cool. I like that because, depending on, the person, you see the situation. Investing in your local community and being able to see what's going on, you're like, oh man, fire next door, COVID happens over here. I could write off $100. I could write off $500. Like it's not going to kill me. This guy or gal's going through worse times than me. Or hey, nah, we see them buying a Lamborghini. Let's go collections. Let's get a piece of that, car or whatever. I get the tire. So in what you're doing, I love what you're doing. This is super cool. In what you're doing, where do you think the future of Honeycomb is going, and why did you name it Honeycomb? I'm curious as to that too.
Yeah. So in terms of the name, um, my co-founder Ken and I we kept coming to this idea of bees building something together. And so we were workshopping all of these bee names, and we got feedback that no, bees are scary. They sting you. Be careful. Um, and so we decided, all right, what can we do that's bee themed but not scary, right? That doesn't involve any stinging. And we kept coming back to the hive and the honeycomb, and what the community of bees coordinates to build together, and is really kind of mutually owned by that community. And so it really kind of fit the brand we're trying to create. In terms of the kind of long-term vision, for us, it's obviously kind of rolling this out geographically. It's making sure that we can serve businesses across the United States. And beyond that, being able to grow with businesses. Today we're doing 25 to $250,000 of capital. If we help someone raise $100,000 and now they need $1 million, how can we continue to expand our business model, expand our network of investors to make sure that we can continue to grow with these businesses? So as they evolve, as they mature, we can continue to offer the capital and be part of that growth journey with them.
Yeah, that's super cool. So how do you guys make money, right? We talk about, like investing and how the business, how do you guys make money?
Yeah, so we have a small investor fee that's typically about 1.5%, depending on how much an investor is investing. We also have basically a closing cost, a success fee for the business owner. And that can range from 6 to 8%, depending on how much the business is raising.
Cool. So if I was raising like 100K and let's just say that was my target, right? And let's just say I can't get 100K, but I only got like 65. What happens there?
Yeah, so we have a minimum and a maximum for every single deal. So let's say for you raise 65 and your min was 60, then you get those 65,000. You can go and deploy your project. Maybe there were two pieces of equipment you can buy, but you can't buy that third piece. That's fine. Let's say your min was 75 and you raised 65. Then we return those funds back to all of the investors. You don't pay any penalty. The investors get their feedback. They get all their money back. And we actually hear from business owners that this is kind of a way to test a project before
Hmm.
they spend any money,
Yeah.
right? They can say, I'm thinking about putting a patio on my deck. And then you go and do it, no one invests, and all your customers are like, no, there's a dumpster out back. We don't want you to do that. It's a sign, before I go and buy all that equipment, before I spend all that money, I can actually validate this with my community to see if they're going to show up on opening day.
Super smart. I love selling something and then building it, right? So this is kind of that concept is let me cast a vision. This is what we're doing. Let me see if I could get buy-in from the community. Vote with your dollars. If you're not willing to throw $100 or something like that and you buy, $100 worth of product every week, then, I need to reevaluate my offer, my value proposition, right? So I love this. And I love the way that it creates a partnerships within a community. So as you guys are building this, what is your role in the organization? What's a day look like? If you and I are hanging out for a day, we go for coffee in the morning at all the places that we invested in, and then what does your day to day look like?
Ever evolving. I will say I like to prioritize talking to business owners.
Mm,
I think every conversation with an entrepreneur to me is an inspiring one. Everyone's got a unique story of what brought them to start a small business and motivates them to get out of bed every morning, despite all of the hurdles that people put in front of startups and small businesses. These are the folks that power through it, and so I love to support the team, talking to business owners, finding ways to be supportive and growing the network of business owners we can work with. And it's increasingly people operations. It's increasingly making sure that we've got people on the Honeycomb team who are passionate about small businesses, who are passionate about growing this really fun, exciting startup in a compliant way. Yeah, so that's a big priority for me.
very cool. What do you do for fun?
Um, it's what,
Being a founder is like, what do you mean for what's fun?
what is outside of work? What does that mean? So I'm a huge hiker. I love to hike. I am on a quest right now to do the high point of every one of the 50 states in the country
Very cool.
over the next 5 years. I just started this. I'm about 12 in already, and so I like to focus my travel around being outdoors and seeing the country and getting out and hiking as much as I can.
When you're hiking, do you listen to music or books or just silence?
Silence. Yeah, it's my thinking time. I love to just take it in, get the fresh air, and just be, either out with friends or just kind of in solitude out in the woods.
Got it. Now, while you're driving to the top points of every state, what's the most played song on your playlist? I like to ask these kind of questions.
The most played song on my playlist. Um, that's a great question. I'm much more of an audiobook guy. So especially when I'm in the car, it's always audiobooks. Um, and I've just been listening to Angela Duckworth's Grit, one of
Oh,
my
so
favorite
good.
books. So like that's probably my most played audiobook, if if that counts.
Yeah.
So yeah, I always come back to audiobooks, and when I do listen to music, it's often classical, which is not very exciting. So
Now, Grit was a great book. I listened to it as well. Really great things. What's a business lesson? Obviously, you need grit, right? But like, what's a business lesson that you heard from her message, and you're like, man, I need to go apply that to my business or myself or my personal life.
I think one thing that always resonates with me is do one hard thing every day.
Yeah.
And really, it's that the effort of if you want to get better at something, you can. One, kind of unblocking yourself and having this growth mindset that we are not fixed creatures, that we can constantly improve ourselves and those around us. But to do that, we have to flex that muscle. We have to keep working that out, and we have to be unafraid to jump in and do hard things and to work out that skill every day.
Very cool. You and I we just finished coffee, hang out all day, and you and I talked to like 100 business owners in a day. It was like the best day ever, right? After coffee and after working with all the groups we've invested in. Then we show up we look at our inbox and we just closed a massive deal, like up to $5 million, right, is what they allow, and we just closed that loan and we got investors to pay for it. What would you buy to like celebrate, right? Like, what's a celebratory purchase for you?
Oh, that's a good question. I'm a man of simple taste. I would say, a nice bottle of gin. I have a little gin collection. And so, go to a micro distillery and buy myself a new gin. That would be a little celebratory gift for myself.
Nice. Okay, likes gin. I'm a Scotch or tequila guy, right? So one day we will cheers over a huge $5 million deal. So let me ask you this question. I've got a stack of cards. They all have questions on them. These questions come out of left field, so I like it because I'm limited in what I think. But tell me when to stop.
Stop.
All right, we're gonna ask you this question. What's something about your life now that you would miss when you're 80? Don't say people. I don't want anybody. Nobody dies. Nobody dies in this equation. Everybody lives forever in this equation. That would be so sad. Or dogs. Your dogs live forever too. So that's the parameters.
Oh, great question. It comes back to hiking, my mobility, right? Being able to get out into the woods and climb a mountain. That's my calling. I love to be out in the wilderness. So hopefully I'm still doing that at 80, but I don't know.
Yeah, yeah. We'll be hiking when we're 80. Totally. So let me ask you this question: when you're hiking, right? Do how far do you typically hike in a day?
Oh, it really depends. If I'm going by myself, probably 15, 20 miles.
Okay. So does it take you a while to get into the zone, or does it happen pretty quick?
It's usually within the first mile or so.
Yeah. And then what happens in your mind as you're walking? What take us on a walk with you.
Well, so it's just moments of clarity. Anytime I go on a hike, I actually bring a list of things I want to think through
Nice.
on that hike with me. And so, start the workout, really get into it, and then I just start going through the list. Sometimes I'm talking out loud to myself. Sometimes I'm talking to my hiking mates who couldn't care less about what I was saying. But it's really just being able to kind of enjoy the quiet, enjoy the outdoors, think through these challenges, and then I always bring a notepad with me, and so I'll like randomly stop and start taking down furious notes, and then I always end up coming home with this big list of ideas. So. Some of them are really bad. Some of them are okay though. The team will tell you it's always dangerous whenever I take a day to go hiking because I'll come back and start firing off all these 100 new ideas I have.
Do you bring binoculars with you, or like a spotting scope or something like that?
I don't, and I'm really bummed with myself because literally the last time my wife and I were hiking a week ago in Virginia, and we were about 35 feet away, maybe 45 feet away from a bald head eagle,
Oh, gorgeous.
and it was just stunningly beautiful, and we really wish we had binoculars there. So that might be my inspiration. Maybe that is my celebratory thing. I'm going to buy myself a nice pair of binoculars whenever we close that $5 million deal.
Gin and binoculars is what you're getting for Christmas this year, Mr. Cook. So as you're going along this process. Oh, actually, one more question about hiking. What kind of boots do you recommend, or shoes do you recommend when you're hiking, especially doing a 20-mile day?
Yeah, so 20-mile day. I love my Oboz big hiking boots. If I'm doing something a little lighter, I love Solomon trail runners.
Very cool. All right, so back to deals. Sorry, like as I'm talking to someone, I get these questions that pop in my head, and I like to get to know the deal maker because behind every deal there's a deal maker, and people tend to do business with people they know, like, and trust. So that's the purpose and mission of this show, right? To get to know deal makers, so then people in the audience could go do a deal with you. So let me ask this question for people in the audience. They're looking at different options and they want to explore Honeycomb Credit as a way to fund their business. What's a good way for them to connect with you and maybe do a deal with you?
Yeah, so first and foremost, honeycombcredit.com. Come check out our website, check out the small businesses we have live on our platform, and feel free to reach out to the team at info@honeycombcredit.com, and it'll get routed to me, and we can connect and talk about deals.
Cool. What question should I have asked you in this interview that, man, I completely screwed up and didn't ask you?
I think we talked a lot about the value to businesses. I think we talked a little bit about the value to investors, right? And I think one thing that we keep hearing is right now is really hard to find vetted fixed income investments. The compression on interest rates, especially as inflation is going up, people are really nervous about those spreads, and it's hard to find that spread right now. And I think that's one of the really interesting things with Honeycomb. Again, of course, there's risk in investing in small businesses, but we're able to offer interest rates between 6 and 14% without any kind of interest rate compression there, and can also be incredibly impactful investments at the same time. So I don't know, so something that I would encourage folks to check out.
Got it. And as an investor coming onto the platform, what would be my minimum, investment amount if I'm looking to kind of explore this, test this out, and then expand later on once I get, familiar with it, more educated and confident?
Yeah, so you can get started for as little as $100. Um, our average investment's about $1,000, but our most common investment's $100. So people frequently come in and invest $100 and start to see the returns and then come back and start investing more.
Awesome. 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 Give us one more time where people could find you.
Honeycombcredit.com.
Perfect. Hey, George, thanks for coming on the show today, man. Really had a good chat. Love talking about hiking and nature and kind of the things that go through our head while we're walking on the path and how you process information. Super cool. Super nice meeting you. Fellow deal makers in the audience, right? Like these are my goal here is to show deal makers and people who help raise capital and people who can help fund businesses, right? Like that's the purpose of the show. So as you're listening in and you find a guest that you want to connect with, go to the show notes and I'll give you their contact information so you could go directly to their website and do a deal, right? Like that's the vision, mission, and purpose of this show. If you're working on a deal or would like to talk about the deal on the Deal Scout, head on over to thedealscout.com, fill out a quick form, maybe get you on the show next. Till then, talk to you all on the next episode and the next deal. See ya.